You are listening to Mining Stock Education.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers, and in today's show, you're going to hear from Dr. Rob Stevens. It's been many months since we had him on the show, but he's back to talk about why the major mining companies outsource exploration. Many of you, including myself, speculate in exploration companies hoping for that big hit. And Dr. Rob's going to talk to us today about this industry and why the big boys outsource exploration to the smaller companies. So, Dr. Rob, take it away, please.
Perfect. Yeah. Thanks very much, Bill. And thanks for having me back. And sorry for the absence. It's been a busy number of months. So, but glad to come back and provide another little tidbit, I guess, for all your listeners. So yeah, you put this out to me, Bill, as a topic of interest is why do major miners outsource exploration to juniors? And what does it mean for speculators? So I thought that's a great topic for us to take a look at. It seems to be a little bit slow at the moment, I guess, in terms of those sort of transactions. Maybe that's just in keeping with the industry at the moment, which is in a bit of a lull point. But it's always a regular part of the industry where we see majors entering into agreements and deals with juniors to, in a sense, outsource that exploration. So in taking a look at that today, I've got sort of four things that I wanted to touch on. First was, well, what do we mean by outsourcing exploration? Well, what does that actually sort of entail? What were the advantages to a major for that? What are the advantages to a junior? And then what are some of the things that we want to consider from an investment perspective? And I might just start of how I sort of define a major and a junior. And really, I do that based on majors are mine operators. Now, they may be a small major and only operate one mine in a single jurisdiction with a single commodity, or they might be a really large international mining company with dozens of mines all over the world. But I call a major a company that operates a mine, and a junior then doesn't operate a mine. So a junior tends to focus almost entirely, or really does focus entirely on exploration. Majors explore too. Using their own teams. I don't want to get the sense that they don't explore, but the bulk of the global exploration is often done by juniors because there's so many more of them. They're very entrepreneurial, and they're out there working, in all corners of the world. So we talk about this outsourcing. It's really about majors funding the juniors is the way to look at that. And so instead of the major company doing the exploration itself with its own teams on the ground, it funds the juniors to do that work for them. And so that might occur through a number of different means, funding through an equity deal, private placement type scenario, similar to other funding arrangements, but one that's then specifically for the major to purchase shares at a certain level. Usually that comes with an agreement about what those funds will be spent on, which project, and the major will have some maybe informal, if nothing else, influence on what those dollars are going to go into. A second one is funding to earn into a project. And in this case, I don't look at so much like an option agreement. Typically in option agreements, in this case of the major would actually be the operator of the project. So I'm not thinking about it so much as the major being the operator, but instead of buying equity, they're funding to get an interest into that project. So it's a non-equity funding, and they're not the operator as well. The junior would remain the operator. What we do see in those deals, they can often be staged towards obtaining a controlling interest in the project, after which then the major would step in and become the operator at that point. And, so you see things, there's going to be an initial funding of, say, $15 million, and they're going to get 25%. Then they have to fund another 10 and they get 40%, and, that sort of thing. And after a substantial amount of funding, ultimately they'll get a controlling interest in that project. Many of these deals come with a right of first refusal. which could be the right of first refusal for different things, such as funding, continuing to fund a project, or the right of first refusal to get a greater interest in it or an ownership in that project. So we often see those as parts of the deals that take place. And another one that we see, it's happened off and on, and maybe one of the most common ones right now is this BHP Explore, which is an incubator or partnership program. In this case, BHP has been quite active in helping to develop some startup companies. And it's great for the junior in this case. They get lots of help and support from BHP. The initial funding is only $500K, so it's not a huge amount. But it does open the opportunity for future funding opportunities from BHP. So that's an interesting initiative that BHP's had underway. I think they might be on the third or fourth iteration of that particular project. So those are just some of the different ways in which the major may get involved in terms of funding. So what are some of the advantages? Why are the majors wanting to do this? Well, I think for them, it helps to manage risk. They get into different risk stages in the project. They may choose to get in at the grassroots stage before any discoveries, maybe in an area play, a region that's suddenly become hot of new discoveries, and they want to get in there. Often we find, though, that they tend to wait a little bit and wait until a discovery is made. Let the junior do that really high-risk work, and once it's been de-risked to a certain level, then they'll move in. And talk about de-risking further, let's say after a pre-feasibility study that's showing some good results, good numbers coming out of that, then maybe they'll step in at that point. I guess one of the farthest levels I would go to, and this gets after exploration, is even after a company's gone through environmental assessment. And if they've received their environmental assessment certificate, there's a major de-risking at that point, and then we may see the majors come in as more of a takeover at that point. And we're not really talking about exploration then, but I think that's a big part for majors, as they can choose to enter at different levels of risk and get different levels of ownership for a price point, depending on that. I think another important part is they tap into a diversified skill set of juniors. There's a lot more juniors out there than there's majors. There's great people working for those junior companies, technical people, business people, entrepreneurs, little bureaucracy, fast to move. There's a lot of opportunities with juniors that majors often just don't have because of their size and to a degree bureaucracy. So there's a real opportunity to tap into that range of expertise. Likewise, diversifying or tapping into different geography, commodities, jurisdictions. Maybe they're concerned about a jurisdiction from a risk point of view, so they can sort of get their toes in there without fully getting in there by funding a junior. I often think, for example, where I'm based in Vancouver, we have some teams of people here who are really knowledgeable about the Golden Triangle in British Columbia and have real geological expertise in that. So there's a great chance for a major to get into a project there that taps into both that geography area, but also some local technical expertise. Consistent with that is access to properties, let's say in an area play where little ground is available. If everything's staked up and there's no opportunity to get into ground, then that this is a way for them to enter into a region. I said maximize spending on the ground. We always like to see that, the most dollars that are going into the ground rather than into admin. And I think juniors are definitely much better at that than majors. And so they're kind of getting a higher percentage of their exploration dollars actually being spent in the ground when they outsource it. Of course, there is that potential for equity gain. I think that's often not really the driver for the major in terms of an investment if they do an equity funding, but that can't hurt, I guess. And then management influence. I think that's an area that the majors really want to get into. Is yes, they want to tap into all this great stuff about the juniors, but they want to kind of control from the sidelines, and they often are able to do that as kind of behind the scenes again, so that they're able to bring their influence without having to run it directly. So now, what are the advantages for the juniors on this? Well, I think probably many of your listeners would already know this, that it's really about legitimizing the company, the team, and the project. Almost for sure, if a major comes in and enters into a funding agreement for a project, that's going to be a newsworthy item that's going to be out there. It means the majors looked at that project, and we all sort of think the majors are really smart and maybe so much better than the juniors, and maybe there's some truth to that. I don't think it's always the case. I think there's just as smart people in the junior sector, but a good team of people at the majors have looked at it and said, let's get in there. We like the company, the team, and the project. So that really is a boost of confidence. Potential for non-dilutive funding, non-dilutive at least from a stock point of view. They're going to get some ownership in the property. So if the major funds the project directly rather than through equity, of course, some ownership is likely to turn over after a certain spending amount. So there is dilution in terms of the property, but not in terms of the stock. Access to future funding. Many of these agreements have that opportunity for more funding to come forward. We know that there's been a lot of struggle right now with getting access to funding, and so that's golden. Not only if you can get funding right now, but potentially, a bit of a pipeline to future funding, even more than one additional time. Access to technical expertise, both in exploration and mining. Majors do have good teams of geologists and engineers and other technical people that they can bring that to support the project from an exploration point of view. I also think exploration companies often don't have the mining expertise so much because they're focusing on exploration. And if you're getting a somewhat advanced project, you need to be thinking about mining. That needs to be part of your exploration plan, is ultimately how that mine would operate. So having access to some of that mining expertise, I think, can be quite helpful as well. It's a pathway to development. And I say particularly large capital projects. One of the things that I often see are with something, I take like a porphyry project, a porphyry copper, for example. Often the capital cost to put that project in development is huge. And it's very difficult for juniors to ever get that amount of money. I mean, you see ones where the capital cost is $800 million and the market cap for the juniors is $100 million. So, there's a real disconnect there. So they need a large partner. And getting a major in who's still maybe funding some detailed drilling, but it can be that pathway towards development of these challenging large capital projects. And I think it just does strengthen the company, its team. All of what the major brings to it and their expertise and etc. strengthens the business team and the technical team. So even if things don't pan out with that one, I think you do end up with a junior company that's stronger when it comes out the backside. So in terms of some investment considerations around that, what are some of the things that I think about and that I hear? So funding by major is generally newsworthy, generates interest in the company. And news is always good. Companies that nobody ever hears about don't get a lot of investment, whereas those that are out there with real news, not just rehash news, I think it generates interest. And when a junior can say that we've got Tech, Ph.D, Newmont, whoever it is, in our funding our project and etc., that's going to generate some interest. So improves the profile of the junior company, adds a legitimacy or enhances the legitimacy, let's say, of the junior company. Funding, and this doesn't just apply to funding by majors for exploration, but funding leads to exploration work, which leads to news flow. And news flow, again, leads to interest and hopefully good results that can help to advance the stock. I think it's always good to look at the deal. What is the nature of that deal? Are there incentives and opportunities for future funding? Mostly, I would say that's there, but there has to be a balance between not sort of selling out for very little investment, but creating a deal that encourages the major to keep coming back for further funding opportunities. And I put, does the major now control the show? Another thing to look at in the deal, maybe good, maybe bad. So a lot of times when I think about it, why did the major get into a project? Okay, maybe it's because of the actual project itself, not so much the team that has the project. And the deal may be that they're going to actually be the operator of it, or could become the operator with only a small amount of investment. Maybe that's good. Maybe that we needed that stronger technical team to come in to do something with the project. But on the other hand, a slow-moving major that hasn't worked in a particular area or type of deposit may not be the right one to work on that. The junior may be the one that should be working on that. And by bringing the major in with we can only find a massive deposit mentality, is not always great. And I think that's another thing to think about here, which can still be an advantage for the junior from an investment point of view. Majors are often looking for big projects that are going to produce a lot of metal every year, because that's what they need to, to keep their sort of resource base or reserve base at a constant or increasing level. But, finding those huge deposits is difficult. It may be that only a smaller deposit is found, that the major thinks, not so interesting, backs out, but the junior still has it. So I think there's, both the discovery of a smaller deposit and a larger deposit have upsides on the investment for the junior. And you could argue some deposits, the major decides to step back and they become great projects because the major was filtering things, I think, for being too restrictive in what they were looking for. So in that sense, it's better that the junior was kind of controlling it, because they're going to take it over and continue operating it. So I think that's just some things to think about in terms of the junior and how much you like the management team and the technical team and their ability to operate that project. I would like to see them operating it rather than the major. I already mentioned this pathway for development, particularly for large capital projects that are very difficult for a junior to advance. So that's a great thing to see, especially if you're already in that stock, as a chance to move it forward. And maybe along the same lines, the opportunity to advance stalled projects. And I just put one example in here, the casino project, which is in the Yukon, owned by Western Copper and Gold. That one has been moving along for a very long time, and it's a huge project. So again, that challenges with moving huge projects forward. But now they've got its strategic investments by both Rio Tinto and Mitsubishi. I think it's probably now getting up over 60 million or something. So substantial investment. Not sure that project was going anywhere without that kind of investment. So it really helps to move that forward. I thought I'd put this one in here, investment by car and battery manufacturers. So it's a relatively new angle, really for advanced projects. What the car and battery companies are looking for is the metal. They want to tap into a stream of metals that's going to help them, develop primarily electric cars. So we're not looking so much, definitely not as much on the early projects, advanced projects that are going into development. I say they bring a little less to the table because they're not miners. That's a more of a hands-off partnership, I think, because they don't have that mining expertise that a major mining company can bring to the table, but they might be able to move that project to development, which was struggling with favorable investment terms. So something to think about there. How to anticipate that this might take place, that a major is going to step into a junior's project. Of course, if I had all those answers, I'd be living in a tropical island somewhere maybe, but these are just some of the things that I think are common when it comes to looking at juniors. Good management team with relationships. So if they have relationships with people in major companies, You've got parts of the management team that have come out of majors, and they're a solid team. The majors are not likely to go with a fly-by-night team of people. They want to see a solid team that's going to manage their investment in that project effectively. Obviously, a good project, I mean, that goes without saying. I say an in-demand commodity. So, gold's always an in-demand commodity in my mind. Copper right now, you want to look at one that not only right now, but over the coming few years, looks like it's something that is going to be an important commodity, because those are the ones more likely that a major is going to invest in. Favorable location, not always. I guess there's that risk profile again to the majors. Sometimes they may want to get into a high risk location, and this is their avenue for doing that by funding a junior. But I think you're more likely to see a major interested in a project that has some proximity to their own mines, where they can take advantage of their teams and infrastructure that's there. Of course, that has infrastructure nearby, other potential projects nearby. Miners tend to like to be together in many ways. There's that advantage of where there's one mine, there's others. And I mean, do they have a strategic objective to partner with a major? If that's something you want to look at from an investment point of view, I mean, maybe all juniors would say that, but some don't. Some want to do it themselves. They really want to advance that project. And that's good. That's not a bad model. But if this is an angle you're really looking at, who's talking about trying to find a partner with a major, or who's out there courting majors and talking to them. So those are some of the things I think that you can think about. Probably applies to almost all investments in juniors, but also to this idea of deals with majors, which I think are generally good for the stock, at least in the short to medium term. Ultimately, you got to have results, like always, but I think that they can help strengthen an investment in a junior company that you may already have, or maybe a point to get in. So there we go. A bit of just a short one, less technical today than some of them, Bill. And I always like to end with this, just for those that are interested in learning more. You can find my book here, Mineral Exploration Mining Essentials, on Amazon. And I also have a series of online short courses that dig into a lot of these topics in a little bit more details that you can find on the Thinkific platform at the link here on the screen. So there we are.
Rob, I've talked to different CEOs of Exploracos, and some of them like the dilution at the project level. Some of them like to retain 100% of the project, so they'll take the dilution from the major investment at the corporate level. Do you have a general preference? I know there could be a lot of variables, but generally speaking, what do you prefer?
Yeah, that's a good question. I think for me, I would probably, I think there's an advantage in the major getting an interest in the project. Or maybe I would say that they have the opportunity to get an interest in that project by funding a certain level. Maybe not right out of the gate. The reason I say that is because then they're vested in that project, and they hopefully are more likely to continue to fund that project, to keep moving it forward because they already have an ownership. So that sort of staged building an ownership level in the project. I like that idea because I think there's more commitment maybe. Whereas with an equity one, they can come and go pretty quickly, right? They made it. They still have some stock. They could make a little bit on that or get, some of their return back and they're done. They don't necessarily invest in the project directly. I also think that a junior that is maybe being too close to its chest about keeping control of the project is not necessarily going to structure a deal that is so favorable for the major to keep being part of it, right? Like, I know nobody wants to give up much, but you're going to have to give up something for the major, and you're not going to get, and if you don't, you've got no funding at all. So I think you have to be willing to give, and that brings hopefully the major back to the table. So yeah, that would be my feeling, I think.
And one of the things you give up, as you kind of alluded to in your presentation, is that you could give up the pace of the drill program and the pace of the spend and perhaps the pace of those news releases that exploricals like to put out, especially around conference time.
Yeah, yeah, exactly. I mean, if you get an equity investment, great. You do all that work and then it's done. Whereas if if there's a bit of a longer term relationship, you can keep that news flow coming and hopefully really advance that project. Which is always, it's critical. You got to keep the work going. That's for sure. And I like the idea of the junior doing it, at least initially. Juniors are great at discovering in the early stages of exploration. Once you get higher up, not all of them are great at that. And maybe then's with an ownership that's gone over 50%, the major steps in and the junior still has, of course, a role. But I kind of like that model probably the best in it because it takes advantages of the strengths of the juniors and in where they're good, and then shifts to the major where they're generally better at it.
Have you seen some of these big copper porphyry explorations, particularly in South America, to where like Anglo-American might come in and purchase 70% of the project and commit to spend $50 million over 7 years? I've seen stuff like that. It doesn't seem like it, at least the retail market rewards that though. Even if they're showing progress, perhaps it's not exciting enough, or what are some of your observations when you see a scenario like that?
Well, I mean,
from a share price perspective is what I mean.
Yeah. I mean, 50 million is a pretty good investment. I think part of the thing with some of those projects is they take so much to move forward. I mean, even the one example I gave in the Yukon, I'm not sure what its latest capital cost is, but very significant. So that's about a total, I think, of 60 million there. It does move it forward. Maybe it doesn't, people are still hesitant that it's not going to get it over that hump of the huge capital investment. Those are tricky projects, and porphyries are like that, such a big capital investment. For me, maybe it's a bit more of a waiting game. It's still a good step forward in my mind, but it doesn't necessarily get you to that development. So, you have to recognize there's still a huge amount of money needed to get that project going forward. And maybe that's the hesitancy on the market. It's a good investment, but it's still only a fraction of what's actually needed.
My thinking as an investor and an individual is more North American focused. So with that preface, my question is, with jurisdictions around the world, you just came back from transversing Africa. Are there some jurisdictions out there where the majors are more prone to do exploration themselves rather than outsource it?
I'm going to say maybe two things. One would be, I think, high risk locations. A major is probably more likely to outsource to a junior. Whether it's political risk or safety risk or that sort of thing. It doesn't mean the major's not going to, or some majors, it depends on the major, it's not going to go in there. They may well, but maybe they'll just let that play out, and they'll be interested in themselves entering once there's a higher confidence that there's a project to move forward. Excuse me. That would be my first thought, is managing their risk that way. The second one is I think they really like to be, and it makes sense from an operating cost point of view, to get into places and to deals where they're already operating. So if they're already active in Zambia or in Namibia, that's probably more likely where they're going to look to deals because they've already got the teams there and the relationships, versus necessarily entering into a whole new jurisdiction that has challenges, just simply to be able to operate there properly, nothing to do with risk of safety or political or anything. So, yeah.
Have you seen situations, and I've had a company I've invested in and past show sponsor FPX Nickel, to where they had multiple strategic investors advancing the project. And one of them is a mystery investor that they don't have permission to disclose. Have you seen that often, to where there's a mystery strategic investor who makes a large investment?
Not so much, I guess. It's interesting with FPX Nickel why it's not really a risky project. Well, it's not a controversial project or in a risky jurisdiction, I'm going to say. It's in British Columbia, so I live here. I don't feel we're that risky, but no, you don't see that often. To be honest, it's, sometimes private investors or investors from different countries, they want to keep themselves under the radar, but it does happen, but my guess it's, well, maybe not a mining company, more a wealth fund or something like that that's maybe come in, but yeah. So You see it now and again, but I wouldn't say all that often.
And my last question is, like I said, you just came back from Africa. As you get back in North America, any reflections you can share with my listeners, a bunch of investors listening to us chat here?
Well, I mean, North America has has a well-regulated, transparent, safe, talented bunch of people. So in many ways, I like North America for that, but I think North America has over-regulated itself. And there's a lot of barriers in the way. We hear this a lot, certainly where I live and in Canada in general and in the US as well. Lots of talk about trying to reduce regulation. I think you're probably more likely to be successful in the US than what I see happening so far in Canada. So that's an extra cost and a barrier. Africa has lots of great opportunities in it. It tends to have less regulation and requirements. From my point of view, companies should still be operating at the right standards everywhere, but it can be easier to move forward and advance a project without, a year and a half just to get an exploration permit. That's not happening generally in Africa. You're going to be able to get on the ground and get to work quickly. So it has that advantages, but there tends to be, and this is a mass generalization because every country is different, but political risk, corruption risk, those kinds of things that can be difficult for a publicly listed company to deal with, who can't be getting involved in bribes and those sort of things. It can put barriers up. So while there may be great resources that are easy to move forward on, there may be, you can only do that if you are helping the right person, kind of thing. So yeah, there's advantages and disadvantages to both. If North America and the Western countries could really get themselves streamlined and remove all of this bureaucracy and really focus on what's actually really necessary to manage our environmental and social aspects, we're going to be way stronger than we already are. So
thank you for those insights, and thank you for your presentation today. And if you have time and you're not traveling too much and too busy, I'd like to have you back on in about 3 months.
Yeah, that sounds good, Bill. Thanks very much.